Hey, what is going on, everybody? Welcome to another episode, Rapid Review. Appreciate everybody joining us live. We got over on YouTube and over on X. Chat's open on both, so you guys know the deal. Questions, comments, stocks you want to go over, whatever it is. If you think what I'm saying is absolutely stupid, please let me know. That's why the chat is open. As always, we're going to be breaking down everything that went on in the overall market, leading themes, leading industry groups. We'll be looking at some charts and anything else that pops up, any other questions that you guys have to get ready for trade for next week. We do have a shortened week or extended weekend, depending on how you want to look at it, with the U.S. market being closed on Monday. So we'll take this time to really prepare ourselves for the next week and get ready to trade. So without further ado, it's time for the rapid review. All right. What's up, Brian? Absolutely. We'll take a look at those stocks for you. What's up, Chad? Appreciate you guys joining. All right. So as you guys know, there's the disclaimer, educational, informational purposes only, not in financial investment or trading advice. All right. Market direction. So we're still in an uptrend. But again, we've been kind of in this choppy environment, and this has been going back for almost all the way till October. Things started to look like they were kind of cleaning up. We talked about in the last couple of weeks, but this week kind of returned to that choppy kind of feel to a lot of stuff. So I'm still showing my market direction. I'm just showing it as uptrend, but choppy, just to give a little bit more definition to kind of how the environment feels. The S&P is currently sitting at 5 distribution days. NASDAQ is currently sitting at 6 distribution days. So if we look at the distribution day tracker, which you can see on your screen right there, this is where we currently sit right now. With the S&P, we lost 2 distribution days. We lost one on Tuesday, which was the 12/5 stalling day, and that was due to time. And then we lost another distribution day on Wednesday, which was the 12/8 distribution day, and that was due also to time. So we dropped off 2. What we did do, though, was Wednesday we gained a distribution day on the S&P, which is the 114 day that we see down here, and that basically led us to a net ending of the week of 5 distribution days. On the NASDAQ, very similar action. We did lose the 12/5 stalling day, and then we gained the distribution day on Wednesday. Because we only lost 1, not 2, we are now sitting at 6 distribution days on the NASDAQ. So 5 and 6. Like I had mentioned just before, we do have a holiday on Monday, Martin Luther King Day on Monday. That's going to be, U.S. market is going to be closed, and that will then lead Tuesday to the opening for the week for the U.S. market. Tuesday is going to be a drop of distribution on the NASDAQ. We'll see this 12/11 day drop off due to time. And then on Wednesday, we're going to see both distribution days on the S&P and on the NASDAQ for 12/12 dropping off, also due to time. In terms of any other kind of falling off a distribution, we're really looking at that 12/17 day on both indexes. And to be honest, we'd need a pretty significant, pretty strong move to get to that 5% to see those days drop off. Is 100% possible, which is why I'm mentioning it. But not really truly likely unless we have a really, really big move for the week, but it can happen. So if no distribution is gained from now to the end of next week, we'll be sitting here talking about 4 on each index, with the possibility of less if we get a really, really strong move. All right. So current state of where we're at right now for the week, the S&P is down 0.38%. The NASDAQ laggard for the week, down 0.66%, and the Dow down 0.29%. Again, 2 weeks in a row, Dow leading things out. And that leads us to 2026, the S&P up 1.38%, the NASDAQ up 1.18%, and the Dow up 2.70%. Again, rare occurrence. We don't see this often. The Dow is leading things out. Basically the strongest index of the 3 for 2026. Like I said last week, be interesting to see, is this a year that the Dow outperforms, or is this just kind of like a blip on the radar for the year? Moving averages. So like I had mentioned, we had a choppy week. Where we sit right now, we're below the 10-day simple moving average on the S&P and on the NASDAQ. The Dow and the Russell are healthily above all their moving averages. But the thing to talk about was we did chop around. So specifically on the NASDAQ and on the S&P, we played around with the 10 and the 21 up and down. There was a couple of points intraday where we were below the 21 on both indexes, closing above. At times, we start off the week above, but at the end of the day, we are now below the 10-day simple moving average on the S&P and on the NASDAQ. All right, let's jump over and take a look. That's what's going on in the indexes. And we'll start off by looking at the NASDAQ, as we always do. Again, choppy week. There are some healthy stocks out there. There are other names that are crumbling. A lot of different stuff going on in the market, but for a top-down kind of analysis, we're going to start off by looking at the indexes, and then we'll kind of go to industry groups and then go down to some of these names individually. What we're looking at right here, we had mentioned this pretty much many weeks in a row about this kind of VCP action that we have. And we were really looking at this 1226 pivot point, which was kind of coinciding with the 1210 prior high right here, and trying to get above that and actually, like a stock, break out and continue to run through that and see some strength as we pulled out and some volume pouring in. That was what we were hoping for, but the market doesn't really always truly give us what we want. Monday was a strong start, though. You can see that here on 112. We had basically, we started off the day kind of down, which is normally when you see a start weak and end strong, normally a very positive action. And we got to the all-time high close that we had on the net, not all-time high close, but the more recent high close when looking at this pattern. And then we saw volume kind of come in a little bit higher than the prior Friday. So things were looking positive. And then on Tuesday, we made an attempt again to make an all-time high. We could see we opened a little higher for the day. We started climbing. And then what ended up happening is we rolled over and then we kind of rebounded and basically closed essentially flat for the day. With volume higher than the prior day. So kind of like stalled a little bit. It wasn't actually a stalling day as per the rules, but we really kind of stalled right at that pivot point. And it wasn't really truly what we were looking for. Like we said, we wanted to see some of that strength, but it wasn't too alarming at all either. And then Wednesday is where this real weak action came in. We had the big gap down on Wednesday morning. And then intraday, you could see we broke the 10, we broke the 21, and then we pulled all the way down towards the 50, found some support towards that 50-day moving average, which was positive. And then the other positive of that day, as bad as it was we rallied into the close and we found a way back above that 21-day exponential moving average. So positive action to see that occurring. Despite how brutal that day was, there was a little bit of a glimmer of light as we closed above the 21 and we closed in the upper half for the day. Thursday, positive looked really great in the morning. Looked very positive in the morning as we had this big gap up. We looked like, okay, maybe this was just a little bit of a shakeout on Wednesday. And then we kind of just rolled over and closed below the 10-day, but again, remained above that 21-day. And then finally, closing out the week, we had, again, a gap up on early morning and then another rollover closing below the 10-day. We tested the 21 again, but again, closed above it. So really seeing some sort of support, at least on the dailies where we're closing at the 21-day, which is very, very positive. And then some clear support at that 50-day simple moving average. As when we pulled back there, we kind of were able to close above there. So we're seeing this week was a little bit mixed, right? Because we're looking at this resistance coming out of, like I keep referring to, this VCP pattern. And that's not positive, right? But we're also seeing some support to the downside. So we're just basically chopping around in this range between this kind of these prior highs of the 1210, the 1226, and just hovering around that area, finding resistance, but then finding support at the 50 and kind of at that that 21 exponential moving average. So all of that aside, right? We have the support, we have the resistance. There wasn't a ton of distribution into the market aside from Wednesday, right? We obviously had a ton of selling coming in there. All these other days, there was no like stalling day with higher volume. There was no other distribution day on Friday or anything like that. So I'm positive to see that we didn't acquire a ton of distribution days. And in general, that this is the only distribution day we have since the beginning of the year, going back to, let's see, this day right here is the first trading day of the year. So we haven't really had distribution on the market, which is a positive signal, being that we're kind of bound in this range right here. Let's look at the weekly. Zoom in just a little bit. All right. So weekly, look, you can see the big upper wick, the big bottom wick. We could see the clear support at the 10-week moving average, which is positive to see us finding support there for the overall macro trend. And this is why I like looking at the weekly, especially on the indexes, just to really put into context what's going on with the overall macro trend. We can also see, right, these big candles and they're going from left to right, things starting to kind of decrease in volatility, which is a positive sign. And really just tightening up. I think this week, well, again, a little choppier. You can see that with the way this weekly candle kind of was, but something to take note of. I don't have it on this chart, but if you do pull up volume on your weeklies for the indexes, you will see that this was a higher volume week, which isn't the greatest thing to see when we're getting this choppy sideways action. But nothing that makes me say this, this trend might be rolling over just yet. We still need to wait and see. In terms of key levels, we'll jump back over to the daily. Nothing changing too much. We're still looking at the same levels, just where they are. So the upside, again, that 1210 high, the 1226 high, those two levels, really want to see if we can get back above those areas. Back above these highs over here is another area that I'm kind of watching. And then obviously you have your all-time high, which is that 1029 and the 10-day simple moving average. So those kind of upside levels that we'd like to get through. Seeing resistance at any of those areas is going to be a negative sign. On the downside, these are the levels we're looking at for possible support. And if we do not see support, we break through those levels, that's going to be showing us more negative action. And that is the 21 and the 10. 21 and the 50. And then we have some of these prior lows. I'm definitely looking at this January 14th, which was the Wednesday low. I'll keep an eye on that. That's a very, very short-term low. And then you have the 1-2 low. And then you have over here the 12-17 low. And the other thing to note too, and this is just kind of really diving into just little details, is we know that we've been constantly watching what was the high area of 1010. And then we're also, it's been an area of resistance. It's been an area of support. So that also coincides with that 1-2 low. So that 1-2 low is, I think, really one of those major levels. Like a break of that is probably going to make me feel like, all right, we're creating that lower low, likely going to be getting super, super defensive. But for now, we've continued to make higher lows. We've struggled to maintain higher highs, but it doesn't mean necessarily that it's super alarming, and we're really just looking to see which way we break within this range. Let's look at the S&P. Not too much different on the S&P, but I'll bring it up either way. A lot of this action is pretty much identical. It's just happening at all-time highs. The positive that we're seeing over here is that we are maintaining above that 1029 high and just kind of hanging out right at those all-time high levels. We're within a stone's throw of all-time highs on the S&P. So very, very positive to see that. You can see the moving averages trending up nicely. We're basically at the 10-day simple moving average for argument's sake. We're just slightly below, so not too alarming. Not like we're really a ways below it. We just kind of pulled down underneath it for way we closed on Friday. But overall, I think this looks fairly healthy. All right. I don't see any questions or anything. All right. So let's jump over. Let's take a look at Deepvue and let's start going into what's going on themes, what's going on with the industry groups. So we'll start off as we always do with the theme tracker. We have 1 week, 1 month, a 3 month, and then what is year to date. And looking at this week theme tracker, Bitcoin miners has just been the absolute strongest theme that we are seeing in 2026 right now. You could see that it performed well this week. It was performing well this last month. On the 3 month time frame, going back to 3 months, it is a laggard, way down on there. So this is just something interesting to see. We see it was lagging on the 3 month, but super strong in the 1 month and the 1 week. The year to date obviously is very limited time, being that we're only in what is the 17th today. So this just kind of up here for the sake of just seeing how we're doing so far this year. But it's interesting that we're seeing on the 1 week and the 1 month time frame tons of strength in the Bitcoin miners. So assuming that this continues, we will likely see that the Bitcoin miners now starts to make their way up on the 3 month time frame. Silver miners, another one. This was the opposite, right? Yeah, not really the opposite, but this had strength over towards the last 3 months and is continuing to show strength. So a little bit extended on a lot of these names, but still in a group to really pay attention to. Then we look at some of the other new groups that are starting to show face, which is home construction. Very strong week here, starting to show a little bit of strength on the 1 month time frame, and right in the middle of the pack on the 3 month time frame. Aerospace, unfortunately, due to my job, I'm not allowed to really mess around with trading any of these airliners or anything, but the aerospace industry has been showing a ton of strength. You can see that all on basically every single time frame. Semis, moderate strength this week. If we actually click here, and this is one of the reasons I do love Deepvue. And if you are interested in checking this out, there is a link in the description. And on X, you could always just check out my profile. You can see that. But you can see there kind of a mixed bag here, right? We have some this week that had tons of strength and some this week that were just kind of laggards. So kind of split between the two, but overall the group is starting to show a little bit of strength when looking at the 1 month and the 1 month and the 1 week time frame. Definitely seeing some what we would normally classify as like defensive plays. That's why we also see the Dow showing a lot of strength. So you can see a lot of those like utility in here, industrials in here, materials, oil and gas. Some would argue even aerospace and some of the defensive stuff being in there. But overall, this kind of gives you a general idea of what we're seeing. I think for us, growth stock trend following traders, Bitcoin miners is a huge watch. I'm definitely watching the semiconductors. I have been talking about watching this solar group, and quantum is another group, and I'll bring up a quantum stock that I'm watching. Quantum is definitely another group that I am starting to really keep an eye on, because you can even see on the 1 month time frame, quantum towards the upper half here, and on the 3 month time frame, kind of just sneaking above in the upper half here. So yeah, this is how I tend to use this on not only a weekend basis, but also on a daily basis, and just looking at how things are trending on different time frames. All right, Brian says, have my eye on nail. All right, if you want, we could bring that one up too. We'll take a look at that. All right, let's go over to my ETF theme tracker. This is how I look at industry groups. The reason I love this is it gives me the ability to just look at all these ETFs in RS, which is comparing to the S&P. I could sort in different time frames, 1 day, 1 week, 1 month, 3 months, 6 months, 12 months, depending on what's going on in the market, and just get a feel for where these groups are at in their trend. Are they extended? Are they basing? Are they coming out of a base? Are they in just a complete downtrend? And helps me to understand, should I be maybe looking at some of these industry groups for possible opportunities to trade. So on the weekends, I'll look at the 1 week. We're not going to see too much different from what we saw in the theme tracker, so I'm not going to go really through this. You can kind of see, though, the silver and the Bitcoin, the crypto. This popped up, which is something to look at. We got the hydrogen, right? So we can see we are in an uptrend on the hydrogen stocks. We had this huge downtrend. Then towards the beginning of the market rally last year, we've kind of shown a lot of strength, and then we've kind of based out, pulled back, and we've gotten back above that 50-day simple moving average. So this is definitely a group that I am watching. I feel like a lot of this is tied to the AI, where we need to power AI somehow. Is it going to be solar? Is it going to be hydrogen? Is it going to be nuclear? Is it going to be oil and gas? It's going to be all these different things that are being talked about. So I think that's, not that it really matters, but possibly why we're seeing so much with the energy tied stocks doing well. Like we said, aerospace, just seeing if there's anything really different. Space showing tons and tons of strength. And all right, that's all. It's all in the 1 week time frame. So let's go to the 1 month time frame. This is really where I like to pay attention to. We do have a question. All right. So Brian wants to know, Bobby, question for you. When you look at the charts, do you focus on the weekly first and then narrow down to the daily for pattern rec? I seem to bounce back and forth between the two to see if I spot patterns. For me personally, the weekly is idea of like, where am I in the trend? Are we trending upwards? Are we far in an uptrend? You know, where in terms of like a CANSLIM, are we maybe going to a stage 3, stage 4, stage 5 base? Are we early in the uptrend where we're in stage 1, stage 2 base? Are we just starting in terms of Stan Weinstein's analysis, starting that stage 2 uptrend? You know, what are we looking at in terms of the macro trend? And that's what I use the weekly for. I use the daily more for my entries and more for an understanding of the pattern because it gives me a little bit more detail in you know, prior lows, prior highs, tightness, volume. It to me, it's a little easier for me to paint the picture of what's going on in the chart on the daily. I know some people prefer to use the weekly because it just reduces some of the noise. But in that noise reduction too, it also, you lose some of the little bit of detail that you can use to set some tight stops and also identify just the little things that are going on with inside of a pattern. So to simply answer your question, the weekly is my macro trend. The daily is really what I'm using to identify my entry point, if that helps out. All right, let's go. And now we're on that 1 month time frame, silver. So this is what I'm talking about when I like looking at these patterns, right? On the weekly, we have a clear uptrend, very, very clear uptrend. And you can even see it on the weekly. We're extended. And then it just comes in here. You can just see, again, further extend. So not too much different in terms of the analysis of the weekly and daily. Bitcoin mining. So this is why I like looking at these charts, right? We saw the strength on the 1 week. We saw the strength on the 1 month with these Bitcoin mining stocks. And now when looking at the ETF, I can see we have now broke out of this big, giant consolidation area. We are in a confirmed uptrend. We had a kind of base start forming, and we're starting to see that uptrend possibly resume building the right-hand side of the base. On the daily, what I like seeing here is we based out, we took out this area, starting what seems like a new shorter term uptrend. We're above the 50-day. We're above actually all moving averages right here. And very possibly for any of you like myself who were able to get into a Bitcoin mining stock, you might have seen a similar pattern where you could have got in with what is like either a swing trade entry, early entry if you're more of a CANSLIM style trader, by breaking above this prior high or breaking through a downtrend, whatever you see, like this, looking at some sort of like a downtrend line, just drawing this kind of quickly. Somewhere around there. So this group showing a ton of strength. The pattern is looking really, really strong. It looks like we're starting to build that right-hand side of the base for those CANSLIM style traders. And for, I think, swing traders, a lot of people had probably found a way to maybe get into something, and hopefully the volatility didn't cause them to get stopped out and have it go on without them. That has been one of the themes that has been a little bit difficult in this market, is some of these names that are moving quick. It's kind of hard to set some tight stops, which has caused a lot of people, by all means, which I agree with, just to sit out of some of this stuff because they can't assess their risk. Uranium's another one of those, right? We see a basing pattern right here. We see the macro uptrend, we see the base, and we see a lot of strength coming into this name. And again, another one of those high fly movers that might have been a little more difficult to get in terms of an entry. Metals and mining still showing strength, but for all intents and purposes, pretty extended. Aerospace defense, pretty extended. Rare earth metals, overall, there might be a couple names that are still floating around in here that have some entry points, but pretty extended. Extended aerospace defense, silver miners extended. Blockchain, again, we're seeing the basing pattern right here. The blockchain ETF is right below this prior high, giving the opportunity that maybe we hit, tighten up, and create a really nice entry. Crypto, copper is extended, gold is extended for the most part, oil extended, blockchain, semiconductors. Okay, so this is one too, and the semiconductor ETF is definitely extended. But there are some names that are kind of building the right-hand side of the base. So, but still, I'm still looking into these groups. We talked about hydrogen. Real estate just ripped, making it really hard to enter, as a lot of these names just completely skyrocketed. Here you can see this is a little bit more what I'm talking about with the semiconductors. You can see like this basing pattern right near those all-time highs. So I'm paying attention to this group. Lithium, it's been extended. Lithium's been one of the easier, just cleaner uptrends. I don't want to say easier because there has been some chop and volatility in these names, but clean uptrend right there overall. Future tech, vehicles. This is kind of like your future cars, electric, self-driving, all that kind of stuff, extended. What else? China basing, those China ETF, China technology stocks, basing here, manufacturing up, autonomous vehicles, somewhat extended. Bitcoin, this is just IBIT, really more tied to Bitcoin. Still, like for a trend trader, it's just starting to hopefully start a new uptrend. But clean tech, this is kind of those clean energy solutions we're seeing basing here. But again, this macro uptrend, right? We're uptrending here, but there is a lot of upside resistance, but it's hopefully washed out for a while. So the upside resistance isn't as important. Mexico. All right, we're in the 80s. Let's move on from here. But this is, and on my own, I will go through like this kind of whole list to just get a feel as to what's going on in some of these groups, see some groups that might be starting to form new uptrends. It's really just a matter for me of trend analysis of the overall group. Like here, solar, right? We keep talking about this. Solar really showing a nice pattern here. As much as you have on the weekly, right? There's a lot of upside resistance. It's just been a huge downtrend. It's been uptrending for a long time now. This is still a concern, but less concerning. And then the basing pattern, now that we've had that confirmed uptrend, we've started to base and pause, giving that stair step and giving the opportunity to hopefully get into some of these names. And I do like how we kind of went sideways and then we've kind of kept tightening. And now we've really tightened up right at those all-time highs. So a lot of these solar names presenting some opportunities. And this has been a group that I do have a name in there, but definitely something worth watching. All right. Let's talk exposure levels, and then we'll get into some of these stocks. Exposure levels, very similar to last week. Like you could find yourself in a big range of exposure levels. There are some people that are going to be very lightly exposed because the names that they happen to trade, sometimes not at any fault to their own, just stop them out. Then you could find somebody who is much more highly invested because the names they had got in just all happen to work, and anywhere in between. The thing that I would say the most about what we have in this environment is the macro trend is up and there is a little bit of chop, but things overall, I'm leaning towards the positive side. So I am willing to take positions. I'm willing to bring my exposure up and even to 100%. Because of how close and tight we are to really just breaking into that new uptrend. My risk in the market, definitely, I'm taking profits a little bit faster just because of how choppy things have been. And some of these names just rip up higher and then rip back. And just, you've seen a lot, like, again, a lot more chop. So I do take profits a little bit faster in periods like this. But overall, I think this is still a market where if you see a setup and it meets your criteria, don't be afraid to take it and just know your risk plan on the downside. Try not to overtrade. I think that's what happens in these markets that gets people annihilated is they're constantly, every day, they're buying, getting stopped out, buying, getting stopped out, buying, getting stopped out. And even on tight risk, that's going to chip away at your equity. So be super selective. Don't chase those names, right? We talked about some of these names that are making it very difficult to enter. And yes, it may work now, but we're not here to just get a right trade or do well in a short and little small time frame of an environment. We're here to be successful traders. We're here to have a skill that allows us to make money in the markets years and years and years down the road. And the way you're going to do that is following your rules. The way you're going to do that is having risk management. And sometimes that's going to mean you're in an environment where it's just, you're going to miss names. That's just, I'd rather miss a name and be very disciplined and have a strong rule set that's going to carry me through the years than in a small time frame be undisciplined, catch a couple of names, and then have it in another environment down the road just completely bite me in the ass and then lose a lot of that money. And I think that's some of the disconnect that a lot of new traders have is they see names going on without them. They get like, why didn't I buy this? This stop was too tight. And they try to reformulate their rules thinking that's the rules that are the problem, and just understanding sometimes the environment is just not conducive to their trading strategy. And there's nothing wrong with that. Again, we're worried about being consistent through the market. We're worried about managing our risk and making sure that we can trade for years to come. And overall, as years go by, we're going to be successful. Sometimes that means the environment is not conducive for what you're doing. All right. Let's go back to Deepvue. All right. Let's start off. So Brian and anybody else, feel free. I know, Brian, you threw a couple names in here. Anyone else that has a couple names, let me know and we'll get them on. First one, FN, Fabernet. All right. So on the fundamental side of things, EPS isn't great on the annual side. We're seeing it increasing, but we're seeing it slowing in terms of growth. On the quarterly side of things, the last quarter was okay. You know, we had that 24.88%. The sales were okay last quarter. So from a CANSLIM perspective, okay. It's not something that's great, not something that's screaming to me like this is something I really, really, truly think could be the next true market leader from a fundamental standpoint. But still nothing horrible. More recently flat in terms of the institutional sponsorship. Relative strength hasn't been that great over the 1 month or the 3 month time frame. Not horrible, but not standing out too much. And absolute strength is when comparing to all other stocks. This AS is, I should say AS, is comparing to all other stocks on the database, not to the S&P. ATR is not too bad. ROE looks pretty good. We're in that electronics area, which we're starting to see some strength. You can see precision optics. This is what's also nice about Deepvue. You quickly hover here and it gives you kind of rundown. So in that tech space, and hold on. All right. So Brian said the reason why I'm interested in FN is because of TTMI, both in PCB fabrication. TTMI popped because of the growth in the business in upcoming quarters. I have position for it. Okay, awesome. And look, this is one of those things that I'll always say. I try, and you'll see when I do this analysis, I try to be a little bit more general because I understand everybody has slight differences based on just the community that we have. There are people who are super fundamental and story based. There are people that are just strictly charts. People swing trading. There are people position trading, people using daily, people using weekly. Everybody has their own flavor of what is really growth stock trend following. That is essentially what we're all doing. So I'm going to be a little bit more general in some things. I'll say things from my perspective, but like in example, Brian, where you're mentioning the kind of the reasons behind you're seeing this trend change, you're seeing what's going on in the industry. If that's part of your strategy, that's fine. I personally don't pay too much attention to the news. I pay attention more to what's going on the chart because that's what the big money is doing. And I want to follow the coattails of the big money. All right. Looking at the weekly, right? Clear uptrend. So good to see that. It's been in an uptrend for a fairly long time. I guess you would really kind of go back to last year because it did kind of correct a decent amount, kind of resetting everything where it's at almost like 40 something percent correction. On the daily, kind of just chopping around. We hit all-time highs, pulled back, chopped around a little bit more. So not the cleanest cleanest basing, cleanest setup, just kind of like pull back, break out, pull back, break out, trying to maybe break out again. In terms of the duration of this correction, right? If you look from here to here, it's about a 50-day base, so about a 10-week-ish base. All right, let's see. 1, 2, 3. Yeah, close to like 10 weeks this way. I think there was a possibility for a lot of different entries in here. I'm just trying to think about this. The moving averages aren't too far, though it doesn't necessarily follow that 21-day right there. So for people looking at this, wondering if they can get a new entry on this, you could be taking an entry and just maybe, even the 50 days a little farther. My big question in a lot of these situations is this the best name that you're seeing out there, right? We're not buying a ton of names. Is this the best name that you're seeing out there? The action isn't ideal for me, with just how it's just kind of been choppy, but seeing that resistance at the top. But again, this could be where it tried to go all-time highs, failed, tried to go again, failed, and now maybe third time's the charm. So just again, know your risk, know where your logical stops are going to be, whether it's a moving average, whether it's a prior low, whether it's some sort of swing trade entry. But for me, this is something that I'm not too entirely interested in, but not saying that this isn't going to go for the third time and then kind of break out. So my 2 cents on that one. MU, everybody loves talking about this one. Extended, flat out extended. This was a name that I fumbled. I had bought, I had got stopped out, and then I hesitated in the choppier environment. So really, this one, if you own it, great. Looking at the weekly, look at that thing, taking off. Looking here, we had a ton of volume as we broke out into another all-time high. We found support at the 10-day. This thing is just beautiful. This is the type of stocks that we're really, really looking for. And if you're asking where I got in last time, I got in kind of coming off of these lows right here. And then I got stopped out over here. And then again, when it broke out, very similar to kind of what we're looking at for Average. When we broke out the third time, actually the second time, it just took one off and kind of took off. So, but this I just liked because it was just a little more cleaner with the uptrend, downtrend, shake out, and then take off. But yeah, MU's extended. If you own it, great. Thing looks beautiful. CDE. Mining, silver mining. So obviously we know from everything we've talked about already that this group's been performing excellent. Basing right here. I'm not going to go into the fundamentals just because we know the industry. So a little bit of a deeper base, 40%, but nothing too alarming. Kind of bottomed. We got back above those moving averages. We started to see some support at that 50 down over here in the beginning of the year. And then that trend's we've seen this just trend of higher highs and higher lows coming through the base. And now we had a really, really strong 6% move on, Friday, kind of pausing right at those all-time highs. This is one where if we just keep going on, it's going to be a little tough to really manage your risk unless you're just buying purely the breakout with your standard stop. Where trying to find a tight entry isn't going to be easy. But if you're buying the breakout, we're right below that breakout, so I would keep an eye on that. If you're somebody that wants to have more of a technical stop, really, really tight, hopefully this kind of pauses and does its similar action of just rally, pullback, and we get a tight pullback towards those all-time highs. All right, we'll go back to this. Brian said it's tough to determine if it is a best name when a lot of stocks are extended. That is my dilemma. Chase after extended stocks, maybe get into a stock that hasn't broken out yet. I'm assuming you're referring to the CDE, where the overall silver miners are pretty extended. That's kind of your concern, is that you're buying the laggard in the group, and that could be definitely a possibility. I can 100% see that. So definitely something to keep in mind. Is the group really extended, primed for a correction, and then this is just going to get beat up as it tries to break out? But that's also why, for me, I might just wait a little bit to see how it interacts with these all-time highs. Even if it does break out, give it a chance to maybe pull back. If it doesn't, oh well. If it does, great. I'll get a nice tight entry. All right, last one over here. We have SEI. Solar, right? Solar. I love the volume we're seeing. Love this. Has been a little choppier in the basing action, but the volume right towards that breakout's been really, really nice. To get to that prior low or to the 21 is a little hard to manage my risk off of that entry. So I'm keeping that in mind. But this was a name I was watching, and there's a lot of different ways you probably could play this. For maybe a position trader, they're okay with buying something like this, but it is starting to move up pretty quickly. Again, hopefully things kind of tighten up and give you a tighter entry, but still, Solar's looking great. This is hitting all-time highs. Just know how you're entering based on your strategy. We'll come back to that. Banana Kid, AEM. This is one that I had owned and do not own anymore. So this kind of broke out, right? And it's looking like it's starting to kind of tighten up, maybe move a little bit sideways. It's only been a couple days of this tight action, so nothing I would enter based on this. Somebody else might be comfortable shooting off these lows with how strong this group is acting. Because if you did shoot off these prior lows, even right here, I mean, you can get a pretty tight stop. So if you want to do something like that, where you could say, all right, we've ran up, we've kind of started a little sideways action. We had this inside day right here. We've held above those lows. Maybe you can do a nice tight entry off of this with minimal risk. But it's, to me, still extended, and I'll just let it kind of go without me. PJT Partners. PJT. Oops. Can't type. PJT Partners. Yeah, this is one of those just wider swinging. It's been a big long base. What I don't like is it was tighter here, and then it just started getting really loose. Really loose. We're right at all-time highs. What is this? This is like the banking. Banking has been showing some volatility with a lot of the news going on, depending on the type of or way. The actual traditional banks not really doing so great. Some of these other names, or financial firms and stuff, doing a little bit better. To me, it's just I don't know. This isn't like the best name out there, and it is starting to move. But again, a lot of these names that we're looking at, they're like right at those all-time highs. If they do break out, especially from this big consolidation, could be a new run up out of a bigger breakout. Even here on the weekly, you could see there's just a lot of resistance at this area. So that's good. I like seeing that we've had 1, 2, 3, maybe possibly 4. Is this the time where now it breaks all-time highs and all of this is kind of pressure is out and we just go on a complete run? Just in terms of an entry. And the entry isn't actually that bad. We're under 8% to the 50. So I could see definitely wanting to take a position on this. And a lot of volume coming in on the upside, which is positive. Chad wants to look at GMED. Can't type. GMED. Globus Medical. Medical definitely been one of those names that a lot of people are watching. Let's see. weekly. Big move. Fundamentals not so great on this one overall. Let's see. Bear with me. So it looks like it tried to break out, had a ton of volume, and then kind of squatted, and now it's looking like it's trying to break back out again. You can see using that prior low and the 21, you could probably do a two-step stop on this. The 20 closes below 21, and then also this prior low, so you can enter your stop tight. It has been going sideways for a while now. Again, looks like it tried to break out and then just kind of squatted right back down on low volume. So I could see this definitely being a name that willing to take a position on for sure, with how it's kind of just had this basing pattern, ton of volume, broke out, pulled back on lighter volume, and now it looks like it's trying to get back above those areas, giving you a tight stop. So yeah, fundamentals aren't that great on this, but I could see where somebody would want to enter on this for sure. EOSE. All right. EOS Enterprises. All right. So earnings are kind of trash on this. Last couple quarters, negative earnings, not making money. Sales are shooting up though, and sales are ridiculous. So this will sometimes help me offset when I look at the earnings, when I see just ridiculous sales pouring in. But the annual sales aren't that great. So it's really been this last year, we've seen this skyrocketing sales here. Annual hasn't been all too great, but I would still the sales rating is 99. I would still consider looking at this name just because of how great the sales are. The institutional sponsorship kind of pouring in there. On the higher end of the ATR, going up above the 7 area. Great relative strength or absolute strength on the 1 month, on the 12-month time frame, on the weekly, clear uptrend. You have this big pattern. Let's see. And right now, we've just we had this what looked like a pullback and try to break out, and then really just forming a more traditional base, breaking below the 50, getting back above, seeing I love this ton of volume coming up on the right-hand side, getting right to those all-time highs. So definitely a name to watch as it gets to those all-time highs for sure. Yeah, I think this is worth watching, definitely. Let's see. I'm trying to think of some of the names. We'll talk SanDisk just because it's such a popular name. As you can see, we have earnings coming up in about 2 weeks. You could see where I was kind of looking and entered over here. This is what I talk about, is just very clean base. We just had this sideways action, started to make an all-time, get above those prior highs, and then pull back nicely. And tight volume, really tightened up right to those moving averages. And then we got that big high volume move. Yeah, so this is a great breakout. It's ran up nicely. It's now been riding that 5-day simple moving average. It has slowed down, which is good, but we're still pretty, we're almost 10% off of that 10-day simple moving average. This is extended. I had taken profits on the way up and have a smaller position, and now I am right now really just riding the 5 SMA and just seeing how much I could squeeze out of this. If I get a close below the 5 SMA, I'm going to trim a little bit more, and then see how things interact at the 10, and just kind of slowly trim off on the way up by just kind of trailing those stops. That's my plan with this. Like I said, that I do own. This is one of the solar names that I do own, as it kind of broke this sideways action right here and started breaking what was this little small tight downtrend right near those moving averages. It started to make that move for that day. I was able to take a position. It's now kind of broke out, created where it seems to have flipped. What was resistance is now becoming support, which I really like. And I might actually look to add on to this name if things could kind of tighten up and get kind of the similar tight inside day action. and then possibly get where it looks like it's doing, I guess you would technically call that some sort of like a wedge pop to get in and add a little bit to that position. Hut, this one, same thing as it pulled back in this handle, got really tight to these moving averages, showed some strength on this day right here. I bought some. I did not add as it came out here because this is just a high volatility stock, and it's kind of run up, it's kind of pulled back, it's holding that 21. It's at those all-time high breakouts. So this name is a little tough because it is a high ATR stock, but there's another name that I own. 5, this I bought way back here with this like kind of cup with handle type of breakout. Has run up. It's basically just riding the 21 day right now. If close below 21 day, I'll close out the rest. I took some profits at about 15% for a profit taking doc, and this was a little one more, I'd say probably sloppier buys. I think I bought a little too extended out of here on this day, but right now it's just kind of in the all-time high range, pulling back, tightening up near those moving averages. So I'm keeping an eye on this. This might even be somebody that'd be able to get in on a swing trade entry at this. So this is what I own right now. In terms of what I'm watching, and I had mentioned this, the QBTS, this name I had bought, did I buy Thursday? Yeah, it was Thursday, I believe I had bought, kind of breaking this downtrend, and then completely reversed on me, and I ended up getting stopped out on Friday or one of the days. I honestly drawing a blank on the days right now. But we can see this is still constructive. We're still really, really tight to those moving averages. We're seeing the volatility contract. We have a clear downtrending line that we're kind of seeing resistance at. So I'm hoping we can get even tighter, tighter, tighter. I might be willing to even take the position on a really, really tight to stop kind of like flag type pattern. Like if we get like super, super tight here where I could just put in a real, real tight stop and this can kind of break through here, I'd be pretty happy with that. Or if we just get a pretty good move and I can manage my risk, I will look to possibly re-enter this. Other names on this list, another energy name, just keeping an eye on Bloom Energy. This has been very, very difficult because it has gone up so quickly. Very, very hard to assess my risk. I let it go, even with this double bottom breakout because of how far it extended. And then it said, haha, joke's on you. We're going to keep going. But again, we're all about managing risk. So I'm fine with this going on without me because now it's hitting these all-time highs, and we'll see if it does tighten up here and give an entry. Ideally, it kind of pulls back, goes sideways, let these moving averages catch up and gives an entry, which is definitely a name I would be interested in because it's just had this real nice basing pattern. It was a really strong uptrend, ton of volume, basing, and then hopefully give an entry. Cypher Mining. This is a name I've been watching. It's looking like it's kind of flipped a little bit, right? It was in this downtrend. It's starting to turn towards that uptrend area. We had a really strong high volume day on Friday. And this one I'm going to probably wait to see how we interact because we have this other peak right here. See if we can kind of get another tight area and possibly enter on something like that. Monolithic Power, this is extended, but this is just those semis areas that's looking strong. Reddit, I got crushed, not crushed, but I got stopped out on Reddit. I think I took like a 3.5% loss. I was moving into QBTS, which ended up helping me out on that Thursday because I didn't hit my full stop because I rotated from the laggard into QBTS. Guardian Health, this one I'm definitely watching. A lot of these health names, we're seeing that similar pattern, basing, attempted breakout right at those all-time highs, pulling back, finding support, those moving averages, and then looking to hopefully break out again. Keeping an eye on this. If you go to these prior lows, depending on how far extended you get off of there, you're somewhere within this area, trying to keep that risk at least. I could stair step down to like a 7%, keep my risk small. And Halo, biotechs have been a little choppy. Biotechs have been a little tough. You can even see it in this chart pattern. Big double bottom right here. We can see that like almost a double bottom and then kind of pulling back on a handle with really, really light volume. And if we do get back above this area, what I do like is we're only like 5% to that 21 EMA. So keeping an eye on that. This is one of those that the fundamentals look good in this. This is a name that I've watched for a while. Not a high ATR stock, but just, again, this double bottom kind of pattern. A little bit of like almost like a handle, 1-2 week handle maybe we'll get out of this, and then real tight stop. So a couple names that I'm paying attention to over there. All right. Well, while we have some people in here, I figured I'd show just, I know with a lot of people, right, we're always talking about risk. A couple of you guys know I have been working on a trading journal, risk management, performance analytics platform for people to be able to easily and simply track all their trades, manage their risk, look at performance metrics, and then on top of it, be able to journal your trading decisions, be able to journal your mental and your personal life to tie that into how it's affecting your trading, and be able to journal your look on the overall market and tie AI into all of this to give you the ability to make sense of things. I have found over the years, and actually we'll just jump over to now. I found over the years, the big thing is I would do all this work to journal. And then what would crush me is I spent all this time with all these write-ups. If I'm going to use this and make sense of any of this, I now have to go through and manually identify trends, manually read through these things, highlight sections where I see fear, I see this, and use that data and somehow make sense of it, right? And I just found I didn't really get much out of it except just the reflection in the moment, but never really able to analyze it to make decisions on what I should be changing in terms of the macro trend of my trading. So I also have tried a lot of trading journals. The big thing that I had found is, number one, a lot of these journals are so tied to like day trading. There's just so much crap in there that I don't need and metrics that I don't want. And it's just a lot of them, when I would try to dump my trades in there, the numbers would come back wildly off because they weren't taking into account stock splits. So then I was adjusting things to take into account that what my broker said I bought at and what the stock and the system says the price is now is off. Or the logic behind a lot of the tracking just never seemed to work for me. And a lot of these, I just couldn't get any support to help me out. And I would just give up and cancel. And I just got to the point where I'm like, the Excel sheets were getting too just annoying. The copy, the pasting, the typing, the just manual data entry was taking up way too much time. So then I took away from time of actually journaling, which is what I thought was going to be a lot more valuable than just entering numbers that I can get from my broker. So I just found my tracking, my journaling, very, very clunky. On top of this, he's going to wonder why you named it Waypoint. Do I think Shake is going to wonder why you named it Waypoint? No, I don't know. Well, I've talked to Shake. Shake knows about it. And I actually just didn't think of it. He's Pinpoint, I'm Waypoint. I'm going to be honest with you. This is so AI driven. The whole name Waypoint came from me just talking about what my goal was for the actual product, explaining some things that I thought were cool, which is nautical themed. As you can see, I got my Cove shirt on, and AI spat out Waypoint as one of the options. So I didn't think about this until now, Pinpoint, Waypoint, but I mean, he didn't say anything to me. And if he would have been like, yo, this, why you taking my point, bro? Then I'm sure he would have said something. But just so you know, I didn't even come up with this name. It was me talking with AI and just talking about the vision for the product and things that I just thought were cool. And, part of it is path to profit. It knew that a path to profit. So path, waypoint, navigation was kind of where AI, I guess, came up with the idea. And I'm like, this is a sick name. And that's kind of where I went with it. So good point though. The other thing that was always frustrating for me is I'd be doing my post analysis and I would first have to group all my trades. Then I would have to see what was my initial buy, what was my add-on buy, where was my partial sell. So I'm trying to make now calculations because very few of us, I think, are buying sometimes in one lump sum and selling in one lump sum. Sometimes we're buying partially, adding on. Sometimes we're buying in one lump sum and taking partial profits on the way up. And then just organizing everything to do my post analysis became a headache. So, that really led me to just say, I'm going to design something that does everything that I want. Um, Add some stuff in there that I think other people might want, and then allow people to set their platform up to be able to customize and give them everything they need, make things very quick and very simple. So while I have some of you guys watching, I figure I'll go through this real quickly. The big thing, you're going to sign in, and this is a test dummy account. I'm not managing like $2 million. I wish. You're going to come in here. The big thing to start off is your settings. And if you've seen this before, I've done some updates. APLD. I'll take a look at that 100%. So you have the ability to manage multiple portfolios. You have the ability to select what kind of margin, if any, the account has. And you can set those all up, name them whatever you'd like. If you do import your trades, it will take into account interest. It will take into account deposits, withdrawals, and all things. And that's another thing. It uses time-weighted returns when talking about your equity and your P&L and all those things too. So you're getting really like institutional grade equity curves and P&Ls because you're accounting for the managing of the funds too and withdrawals and deposits versus you put a big deposit in and the P&L looks all ridiculous. That was another problem I had with a lot of other platforms. Then you have these custom tagging systems. This was put in for the ability for me to quickly document that I don't have to sit there and type everything out. So here are all your defaults in terms of setups, reason that I'm buying, reason that I'm selling, but you can add any customs in here. You can delete out the ones you don't use, so you only have a small list. And you can basically come in here and quickly document, and I'll show you how that's done. Then for my post analysis, strengths, what did I do right? Weaknesses, what I did wrong, all customizable, anything you want to track, stuff you're doing consistently wrong that you want to see, when do I do it right? When do I continue to do it wrong? You can create all these tags here. Journaling tags for your personal life, for your trading mindset. Again, the goal is quickly document. I slept well. I slept poor. I worked out. I did not work out. I woke up late. I woke up early. I was on vacation. Whatever it is, you can design these all custom for things that you want to track to just be click and add and document for your journaling. And this also makes it very easy for the AI to track trends. Default risk management settings. This is where you're going to kind of put in your risk management general rules and max rules. And then this is where you can put your trading rules, which should already be typed out. You can just drop them in here and save this. And this supplies the AI with everything it needs to understand your trading, because that's another thing. A lot of these kind of trading journals have AI, but they don't necessarily know my trading style. And I don't want to just analyze in general. I want to analyze to my rules so I can identify where my gaps are. So this all in here to basically coach your AI. One of the big updates that I have done, did I put it in here? Okay. It's not, it hasn't hit live yet, but I have built in AI into it. Originally, I was saying you had to bring your own API key, and I realized for some people that was going to be just a little bit of a headache. So I just had to slightly adjust the pricing to accommodate building in the AI and the cost of AI per user. But there is a built-in AI feature, and I've found a way to get it where it's going to be pretty good out of the box. If you're a power user that wants to just do different AIs, wants to do some crazy stuff, you still will have the feature to bring in your own AI model and basically use that. And this also gives us the ability to update as AIs improve in the future, so I can keep providing the built-in AI as the most latest model. All your trading is going to be able to be exported. So you have all this right in here. So if you decide to step away from using this platform, you don't lose any of your data. You can export all of that stuff and it's all documented. And this is just kind of account cleanup and things like that. So when you're coming in, a lot of the setup is going to be coming in here. Then it's going to be, as of right now, there's no broker integration. I am working on that. I have to use a service provider just to ensure that everybody's accounts and everything are protected. So service providers have the ability to do that. But right now you can import your trades via CSV file, dump those in. It documents all your trades in here. You can also log trades manually. What it'll do is it'll group these trades. So if we're coming in, like this has 5 executions, it will know what was the initial buy, what was the add-ons, what were the partial sells from starting to zeroing out the position, and keep track of it, not only in the macro trading area where you can see for each trade what happened, but then also understanding what the overall campaign or macro trade produced in terms of P&L, in terms of R value, and then also the impact to the portfolio. And this is more of those data points that I want to add because if I have a 100% trade, that's great. But if it was one of the smallest positions I took for the year, the impact to the portfolio is just going to be very, very small. Identifying maybe why I'm not performing as well as I think I should be because I'm not taking those big positions on those best performers. And then you have weighting here, which helps to kind of keep track of that. So giving you the data to look at things from micro level, look at trades from a macro level, the position sizing, the R multiples, the trade P&L, the impact to the portfolio, the entry weight, the peak weight, and really giving you a whole picture of what that campaign looked like from buy to sell, to help you dial in what's going on with your trading and why you're either performing very well or performing poorly. So all your trades will be documented in here. Give you the ability to, obviously, like any of these platforms, kind of just quickly sort. You could look at things from a micro perspective, look at things from a campaign perspective. You could sort, advanced filters, all the usual kind of things to give you the ability to look through everything. Now, when you're looking at these trades and logging them manually, you can obviously put your ticker. You can buy, sell short, cover short. You can obviously have your price of your shares. Your fees can be accounted for, dates. Here's what I was talking about with those tags, right? I don't have to really do much. I could come in here, and if it's a cup with handle breakout, I quickly go cup with handle, position trade. And now I know the reason I took that position. I could quickly come in here and I could, well, that was a bad screenshot, but I could quickly screenshot or clip a trade, hit Control V or paste and drop the chart in there with all my markups. So all my chart screenshots are saved. Then in my charting platform, I can delete all the annotations and clean things up because it's all going to be saved within here and then documented. And sorry, I'm kind of just going off, but if you guys have questions about things, let me know. So that'll document all your trades. You'll have your dashboard over here. This is where all the different widgets and metrics are going to be documented. This is kind of everything that comes in the ability of Waypoint to track. And then you have the ability to essentially delete and show only the ones you want. So here are all the different metrics. The full time frame just shows what pops up automatically. And then you can organize and customize and move things around and size things however it is that you want and develop your own kind of visual and platform layout to show only what you want. Like if you're a person like me that I don't care about dollar amounts, everything I do is in percentages, I can get rid of all the percentages. There's things like your win rate, your P&L, your payoff ratio, your profit factor, R multiple average. There's average winning R multiple, average hold time, average win, average loss, these best impacts, best ROI trades. And I can click here and quickly bring myself to that actual trade. And then there's a couple other cool things. Here's your equity curve. This will all automatically calculate too. So even though you're only putting in when you buy and sell, the platform will look through when you're holding those trades and look at those unrealized gains and document what your portfolio balance would have been at every day, even though you didn't sell, and be able to tell where those peaks and valleys are. The reason I like that is it gives you the ability to look at your current drawdown and also your max drawdown. So you can kind of see where things went wrong, where your worst drawdowns were, where you are right now from peak, things like that. Visuals like trade outcome, a couple notepads. So you can just have somewhere to keep track of stuff and put notes in there, checklists. Another thing that I liked adding and I think is great for new traders, you can put your daily routine and your weekly routines in here. And what will happen is every day at midnight, this daily routine will reset and everything will be unchecked. So you can go through, check off your routine, give yourself that satisfaction of I got everything I need done. And then the next day, without even touching it, it'll reset to tell you, okay, now you're back to your daily routine. That same functionality will work on the weekly routine. You can build out your weekly routine, and this will reset at the end on Sunday night at midnight for the next following week. Last thing up here, tilt breaker. This tilt breaker logic is pretty cool. So Matt Petralia talks about, depending on your win rate, depending on a lot of your metrics, what is the likelihood of having X amount of losses in a row? And it's just a probability. He has a graph. You could look it up, and it gives you, if you are a X% win rate, you're going to 100% or like 99% have this many losses in a row at some point. When you start really exceeding that based on your win rate and based on things in your metrics, you are likely going on tilt, or you're likely in a bad environment. Something needs to be brought into your attention to be like, your things are not right. Something needs to be kind of looked at. So I put in this tilt breaker logic. It's just basically a little indicator. You set from 1 to, I just did 20, but you set what it is that tilt breaker triggers on. Did not reset. There we go. Okay. So when it triggers and you've had too many losses in a row, it will let you know with this nice big bright tilt breaker saying, whoa, 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 you've had too many losses in a row. Something needs to be looked at. Take a step back. All right. Risk manager. This is huge. And I know I'm kind of going on, and if you guys are, done with me, you can obviously leave, but just so if you guys want to see it, and I'll do some more like smaller videos and more in-depth videos, things like that. But this is big because I think a lot of people forget it's not just about how you're managing each individual trade, but it's also like knowing on the positions that I own right now, where are my stops, how much risk do I have in the market, and really having a really, really tight risk management plan going into the next trading day. And that's what this tab is kind of allowing. So your positions will be down here. And again, these are not, I own 5, but I don't own AME. This is just a test account. And what will happen is you're going to come in here. You'll be able to see the positions that you own. For any of the buys that you have, you'll have the initial stops, which will auto set to your default stop, but you can update to whatever exact stop that you're using. And then that'll be used to calculate your current R value. And then you can see all, so you get a detailed of what's going on with this position in terms of transactions. And then in here, you have your current price, which this will reset basically at the close of every day. And then you have your current stops. And you can enter your current stops, hit save. So let's just do, and then it'll adjust. And what it'll tell you is, number one, you can see where your P&L is at right now, which is fairly simple. But then you can also see, all right, how far am I away from my stop? At the 180 right now, we're 8.9% away from that stop. If I get stopped out, what will my trade result in? If I get stopped out, it will result in 8.6% loss. The current R value based on the current price and my initial stops, and it auto calculates when you have multiple buys. The current weight of that position, and then my net risk. And then my net risk is basically saying from my initial buy, right? So right now it's a 0.2% net risk of my portfolio. If I move this up, and I like this because now you move up stops, and it also calculates when you take profits, it'll adjust your net risk when you de-risk a trade. So if you have sold and de-risked because you had taken profits, that number balances out where now where your current stop is and how much you've profited, there's zero risk from the initial buy in your trade. It'll let you know there's a net risk of 0 on that trade. You've de-risked that trade. So that'll all kind of be calculated. And your trade heat is basically saying, like, from the current unrealized gains to my stop, what's the portfolio impact? So right now, where the stop is right now, this would be a 2.2% impact to my current portfolio equity trade for the individual trade. So you can do that for all these. You can quickly come in here and add to positions or close out the positions right here. And then your portfolio heat is essentially saying, if I get stopped out of everything, what's the damage to my portfolio? So right now, where I'm at right now with all these, or this isn't mine, but like where the test account is, it's saying that all my trades get stopped out. It's a 2.16% hit to my portfolio. And you can also set the max you want on this. So this will turn red when it hits a point that's maxed out. Same thing, your largest position risk, you can set that. If it gets too big, this will kind of alert you. You can see your leverage, your buying power, available cash, how much open positions, your unrealized equity returns, what's on your unrealized gains right now, unrealized P&L percent, looking at just from a P&L on the individual trades perspective. So giving you a full on detailed picture of the risk that you have in the market, the ability to control and monitor everything through the risk manager. Down here, you have your new sandbox trades. This is going to be where you can come up with your position sizing, risk numbers, and everything. There'll be stuff kind of pre-filled out based on your default settings, but then you can adjust everything. And like, let's say I come in here and we just put in Apple and I hit get a quote based on these risk profiles. It gives me all my data and I could always adjust these. Maybe I want to reduce to a 0.5% of my equity. Tells me only buy 63 shares. Maybe if I reduce my stop or change these numbers, whatever it is, I can use this to really manage planning out my next trades as well. And this works in the long and on the short side right there too. All right. You got your trade debrief. This is where you're going to come in to do your post analysis. All your pending trades will be trades you have not reviewed. And then your archive will be trades you have reviewed. And again, for the speed aspect of it, all the data that you need, all your notes, all your screenshots will be right in here available. And then you have the ability to look at how you went through this trade. I'll bring up my chart, have all my data, look at what went on. I can quickly grade things. Again, my quick tags, I can add my tags in to quickly document things. I'll be able to just free text write and then add my charts, hit complete, and then it goes into my archive. So the good thing with this too is it also kind of encourages you to keep this cleaned up and continue to review trades as they close. And then you can always go back at the end of the year and go through your archives for the year and obviously sort and all that kind of stuff. Here is a market outlook kind of journal. You can select the exposure levels that you think you should have. And then another thing, I added voice to text in here. So you have the ability to talk, which I can't do right now because the mic's going through here, but talk and document or type and document. And you can just hit save and start documenting this for the AI. Same thing with the mindset. This is very detailed, but you don't need to use everything. You could put everything at post-market, put everything at pre-market, but you can document your thoughts throughout the day, pre-market, intraday, post-market, personal life, trading life, and just overall how you're feeling. Again, quick tags, so you can kind of add things to quickly document certain things and then save. And then that'll all kind of save down here. And then all this will be tied into the AI coach, which is getting enhanced right now. And you'll be able to use the built-in AI to make sense of everything that is going on here. So for anybody that's still here, there's a lot going on in this right now. Again, I'm hoping to roll this out within the next week. It's been a lot just to get this up and running, and a lot of constant changes and adjustments based on what I have seen I like, what I don't like, what I've gotten feedback from a couple of people I have testing it for me, and hopefully look to roll this out to everybody, like I said, within the next week, with just the goal of making trade journaling, documentation, risk management, performance metrics quick, easy, but extremely, extremely effective by using the AI and a lot of these quick tags and things to make sure you're documenting things and able to use it. All right. That's it. That's all I got. Long episode. I appreciate you guys still here. And if you're still watching this entire video on YouTube or in the X replay, thank you. And if you're not subscribed, subscribe, because obviously you spent all this time watching. So I'm assuming you're enjoying this or interested. So that is it. You guys know the deal. We got YouTube, X, link in the description for the Discord. If you are interested in Waypoint, there is a Discord for that. I just reach out to me and I'll send you a link for that. So you guys can just see, I'll talk about some of the things that are going on as I'm kind of developing, keep everybody up to date. And then, when we do release, especially those people, I'm going to be running like a real special deal of like a lifetime access kind of thing for them. But yeah, that's really all I got. Appreciate everybody. Enjoy the long weekend. And, Kona heard it's the end. Want to say bye, bud?